Hello and welcome to today's episode of CASoniaDawar show, where we will be discussing um, the changes that have happened in budget 2021 and how those can impact you as an individual. So you can plan your budgets accordingly and you can plan your taxes accordingly. If you don't know me, my name is Sonia Dawar. I'm a business finance coach here on YouTube and a chartered accountant by profession. All the links that we discussed during this episode will be given in the description below. So if you're watching me live on YouTube, the description would be down. And if you're watching me live on Facebook, then the description will be on top of this video where you're watching me. So stay tuned. After we finish this video, I will be updating all the descriptions with the links of where we are discussing and everything. So don't forget to check the links in the description. So today's episode is all about budget 2021 changes for individual. So without further ado, let's get started. So the first thing that you want to check in the budget, which many of us are impacted, are the tax rates, which gets announced every year in the budget. That's why it is very important, and we look up to budget as an individual to check if there are any changes in the tax rates. So the good thing or the bad thing that there is no change in income tax rates for us as an individual or even as business owner. There have been no change in the tax rates announced in budget 2021. So these changes will be applicable from 1st April 2021 to March 2022. So for FY 21-22, we have the same tax structure and the tax rates as we had for FY 2021. So if you remember, for FY 2021, we have two tax regimes. One is the old tax regime, which has tax structure that up to 5 lakh rupees, your tax structure is 10%. After 2.5 lakh rupees, and after 5 lakh to 10 lakh rupees, it is 20%, and more than 10 lakh rupees is 30% tax bracket, which in the new tax regime has been expanded in terms of various slab rates. But in the new tax regime, you have to forego any tax deductions that you were claiming. So any of the HRA tax exemptions, and if you want a detailed note on that on this channel, then let me know in the comments below and we can cover that as a separate topic, and we can guide you on how you have to select between new tax regime and old tax regime. What you need to remember for FY 21-22 is you have the option again to choose which tax regime you want to choose as an individual. If you are a business owner, then whatever option that you have chosen in 2021 financial year, you have to stick with that option for your business, as even if you are doing that business as an individual. But for any other income other than business, you have the option to choose which tax regime you want to use for that particular financial year every financial year. So choose that option wisely, compute your deductions accordingly, and choose which option would be better for you for FY 21 and 22. With this, let's take what is the second best thing that we look up to after we see the budget. Everyone and the newspapers, while growing up, I have always seen that the newspapers were flooded with what got expensive and what got cheaper after the budget. This year, it has not been allowed. A lot of changes that have happened in the GST tax structure. But there are certain things that you want to keep in mind. So what got expensive are your mobile phones, which we all tend to upgrade every year or couple of years. So this is a very important point which may affect a lot of us. mobile phones got expensive, your chargers of mobile phones also got expensive, refrigerators, ACs, all the electronic equipments also got um, expensive, because the GST rate for these products have increased a little bit, or the products which were being used in preparing your mobile phone, those products have got a higher rate of GST, and hence the cost of that those products will tend to increase for financial year 21 and 22. So shoes, imported auto parts, so your imported cars, if you are buying any imported car, that also will be more expensive for FY 21-22. So if you are planning on buying any of these products, the best option would be to buy it by March, so that you can get access to the old duty structures, and you can buy those things before they get expensive. So that's the tip for you. Now let's see what got cheaper. And for all the girls out there who are listening to this live, the gold and silver jewelry, the gold and silver will become cheaper because of the GST rate cuts that has happened. Iron, copper, electricity. Now, yeah, even in this budget, you have the option that you can choose more than one electricity company. So that also has been an announcement in budget 2021. And your nylon clothes also got a little cheaper. So that was what got cheaper, what got expensive. The next point that we want to cover are what makes our lives better. So uh, the finance department of our country has been trying their best to improve the lives so that we can do compliance, tax compliances better. There have been some auto filling option that has come even last year, that now we last year already we have been able to autofill our ITRs with salary information as per Form 16. We have been able to autofill our ITRs with respect to the bank accounts that we have filed in our last year's return, or the TDS that has been deducted, or the tax that we have paid by way of advance tax. All of those details used to get auto populated in the ITR, even in FY for FY 1920 that we have just filed. So, what has changed now in budget 2021, which will also impact when you will be filing your ITRs for FY 2021 this year, you will already also get pre-filling option for income, such as income from capital gain, if it is incurred through listed securities. So, if you are holding shares of an unlisted company, like of a private limited company, and you have sold shares, you will still have to fill it manually. But if you have sold shares or mutual funds or anything, and have gained capital gain out of that mutual fund, then you have the option of getting pre-filled information in your ITR. This will actually resolve a lot of time for tax preparers who file returns for clients who have like thousands of capital gain transactions. So this is a very welcome step in terms of getting things automated from income tax department. The other income which will also get autofilled would be your dividend income, your interest from bank, interest from FD, or interest from post office. All of these information, earlier only tax amount on these income used to get reflected in your Form 26AS. Now you can even import or autofill your income details, because income tax department already have those details when the companies file the TDS returns, and you get those TDS reflected in Form 26AS. So this will make your tax filing much simpler, and we may tend to see a rise in filing more returns even as compared to current year. So let's move on to the next option that we have. The next uh, thing, which is a very welcome move that this budget has got for us, and that is making lives for our senior citizen simpler by exempting them from filing income tax returns. So this is not applicable for senior citizen who are in the range of 60 to 70. This option is basically for super senior citizens who are of the age of 75 and beyond, and earning income only from pension income and income from interest, that is interest from fixed deposits or something. So if that's the only two option or only two income that those senior citizens have, they don't have to file their ITRs anymore. So this has definitely resolved and would give mental peace to many senior citizens, because I myself had a client who used to walk, even though it was very difficult for him to walk from his house on the B wing of our building to A block of our building, and submit the paper so that we could file their returns. So this is a very welcome move for super senior citizens who only have pension income and interest income, and they are exempted from filing their income tax return. Let's see what we have next. That is interest on affordable housing. So till last year, let me explain you how we get interest exemption from housing. So there is a section 24 which typically gives everyone a deduction of up to 2 lakh rupees if we pay interest on housing, residential house, or interest on any housing. Um, there is another section under chapter 6 of the Income Tax Act, which gives an additional deduction of 1.5 lakh rupees if you have invested into any affordable housing project. The value of your house should not be more than 45 lakh rupees. So if you have invested your money into an affordable housing, and the value of your house is below 45 lakh rupees, you get an additional deduction of 1.5 lakh rupees apart from the 2 lakh rupees deduction that you get under section 24. And this budget 2021 has extended the additional deduction that you get for 1.5 lakh rupees to another year. That exemption was supposed to last on March 31st, 2021, but you get one more year and you can continue to get those exemptions. If you don't know what all tax exemptions you get, we have one guide that we've prepared, which is for tax deductions for employees, and we have covered even this section for FY 1920. We will be updating it for next year, but this guide is still applicable for FY 2021. So if you are planning on your taxes for FY 2021, we would definitely recommend you to go ahead and download this guide, and it will help you to consolidate whatever tax deduction you can take, and which are not really even popular. So this one was not as popular, and many people have not taken this deduction, but you have one more year to take this deduction, and we hope if you have invested in an affordable housing, you take benefit of this section as well. The next change that the budget 2021 has brought is to make your capital gain from ULIP taxable. So if you have invested your money up till now into ULIPs, the capital gain on sale of ULIP have not yet been taxable. Whereas if you had invested your money in mutual fund, whatever capital gain you earn from sale of those mutual funds were taxable. Budget 2021 has proposed to to discontinue the anomaly between the two investment option and make them at par. So from now on, any capital gain from 1st April 2021, any capital gain that you gain from selling your ULIP investments will be taxable. And there is a limit also that if your ULIP premium is in excess of 2.5 lakh rupees in a year, will only qualify if your ULIP premium does not is below 2.5 lakh rupees, then you still get those exemptions. But if your ULIP premium crosses that 2.5 lakh rupees and you invest heavily into ULIP options because of this tax exemption, then those tax exemptions have been gone away from 1st April 2021. Let's see which is the next. All right. The next one is in taxation on interest on EPF. So EPF is basically Employee Provident Fund, which gets deducted from your salary every month. And up till now, whatever interest that you used to earn on that EPF used to be exempt. So as such, provident fund, from an income tax perspective, is a exempt category. So when you invest into PF, whatever money that you have invested would not attract any tax. You get those you get tax exemptions from your total income. So that is exempt when you invest it. Up till now, whatever income that you have earned on withdrawing those PF at the time of retirement, or if you've left those job before after 5 years of opening PF, any interest that you have got from that investment used to be exempt as well. And at the maturity, if you have when you withdraw that entire PF, even the PF principal or the base amount that you have deposited was also exempt from taxes. So there was no taxes on EPF or employee provident fund whatsoever. Last year there was one change in the budget which made that if your employer's contribution is more than 7.5 lakh rupees, then that contribution and interest thereon both becomes taxable. So if your employer is contributing more than 7.5 lakh rupees towards your provident fund, then that amount gets taxable. And even any interest that you earn out of that provident fund was also taxable. So that was budget 2020 last year. Budget 2021 introduced that if your employee contribution exceeds 2.5 lakh rupees in a year, then whatever interest that you earn out of that employee contribution also will start attracting tax. So that will become taxable. But if your employee contribution to PF is below 2.5 lakh rupees, then you still continue to get those exemptions. So this exemption is practically for HNIs who are contributing a big amount from their salary to provident fund, and those amounts have now becoming taxable to the extent of the interest that they are earning. And even for employer contribution, if the employee contribution is more than 7.5 lakh rupees. The next one is belated or revised ITR filing timeline. So up till now, if you have not filed your return by the due date of filing of your return, you have time till 31st of March of after the due date to file your ITRs. Now that timeline has been reduced by 3 months. So let's say in a normal year, so last year was been that a lot of deadlines have been extended, and we all just have just filed our returns by 31st of December. But in a normal year, where individuals are required to file their returns by July 31st and businesses by October 31st, then you get additional timeline either to revise the return or to file a belated return if you have not filed it, or to revise the return only till December 31st of that year. So you will not get 3 months additional to file those returns. So whatever time you had up till now that you could file those returns, belated return, or you could revise the return already filed before the due date, by 31st of March, you can now do that only till December of that year in which you file the return. So along with this option, there is another, because they have curtailed the time limit that a belated return can be filed. They have also curtailed the time limit for tax officers to complete the assessment. So the time limit for completing the assessment also has been reduced by 3 months. And apart from this, they have also reduced the timeline of reopening of any assessment cases from 6 years, which used to be the earlier case, to 3 years now. So now, once you file your return and you get an automated intimation under 143(1) that your return is assessed by income tax department, the department can have the option to reopen the case only for up to 3 years after the return is filed, or after the year the return is filed or the assessment is done. Earlier, that option was available to tax officers for up to 6 years. So this is a very great reduction in terms of cases that can be reopened if the assessment order is passed once. There is one more exemption here, that in case if tax officers have the necessary proof that you have option to revise, or sorry, if your income tax officer have a reasonable ground to believe that you have done tax evasion of more than 50 lakh rupees, then they have the option to reopen your case up to 10 years. And the tax evasion is, this 50 lakh limit is not of the income that you might have evaded. This 50 lakh rupees is basically the tax that have been evaded from the income tax department. So if the tax evasion is more than 50 lakh rupees, then tax officers can still reopen the case till 10 years with an additional approval of Principal Commissioner of Income Tax, which is the highest rank in the income tax hierarchy. So I hope this also gives you a lot of relaxation in terms of getting those assessments done much faster, getting those refunds done much faster. And if you would like to know anything about tax refunds or what you need to do after you file your tax returns, we have a lot of tutorial videos on our YouTube channel, which I would suggest you to watch. So those are that's about that. So we've covered belated and revised return. Now, this is also very important change that Budget 2021 has brought, and not a lot of people know about it. That if in case of a non-filer of income tax return, TDS, whatever TDS used to be deducted on their income will now be deducted at double the rate or 5%, whichever is higher. So there are conditions to this, and the conditions are that if you are receiving, I'm explaining this example from a tax recipient, from the income recipient point of view, or from a non-filer point of view. So if I am a person who's receiving income and I'm not filing my tax returns, maybe because my income is low, or um, I am not aware that I have to file my tax returns, and s- the person who is paying me has also deducting some taxes. Say if I'm a contractor, and my co- where I'm consulting, that company is deducting TDS and paying me for the last 2 3 years. So I have to see that for last 2 years where my TDS in both the 2 years is more than 50,000 or 50,000 or more, and I have not filed the ITR for last 2 years, then for FY 21-22, my TDS rate will not be 1%, which is a general rate for as an individual for a contractor. It will be either double of 1%, that is 2%, or 5%, whichever is higher. So I will now have to pay tax at the rate of I will now have my TDS deducted at 5%. I hope this is clear. So, the tax, if the non-filer has been having that TDS is more than 50,000 rupees has been deducted from the last 2 years, and I'm not filing the my income tax returns, then I will have my TDS deducted at a higher rate as compared to the normal tax rate, even if I'm a resident, and um, if even if I'm a resident of India. So that is a very important point to note if you are not really compliant with filing your income tax return. And the last one is there is a relief being given under Section 89A to all the people who have gone abroad, maybe on secondment, and they have invested their money in social security of their country. So, social security is kind of the uh, retirement benefits and for other benefits that the country is providing. So as an employee of a foreign country, you will also have to contribute towards social security. So there was a dilemma, whether the income that you have received when you had gone to secondment and you had invested that and you had deposited that money towards social security, about taxability, whether that will be taxable in that country, or if you have come back to India, whether it will be taxable to you in India, and there was double taxation on that money. So there, the budget 2021 has introduced relief for those secondaries under Section 89A, and now um, they can get some relaxation in terms of the taxes that they have already deposited in the other country when they were earning that money in the other country. So this was another section which I thought is applicable to individuals and will have an impact on how they plan their taxes for the next year. So with this, we have covered all the changes as which are applicable to an individual. Apart from these, there are more relaxation in terms of faceless assessments being introduced even at ITAT level, and dispute resolution committee has been informed for small taxpayers, so that those assessments also can be resolved much faster, and all of these will be completely faceless. So the compliance will be much better, and the resolution of if there is any dispute also will be much faster for the next year to come. If you have any other questions that you want us to answer, we would love for you if you could comment below about how did you like this session. We have one more live coming in tomorrow where we would be discussing everything, major changes that have been announced in the budget for small business owners. So if you are a freelancer or a creative entrepreneur or a small business owner, we would also request you to come live tomorrow or watch the replay at our channel, which explains all the sections or the changes that have been announced in budget 2021 from the point of view of a small business owner and for their small business. If you like the live and want to be updated with me, with other tax changes, and want to know ways and tips and resources and tools on how you can reduce your taxes and build better finances for yourself and for your small business, then this channel is the place to be. And subscribe to the channel and hit the live notification uh, so that you can get the live updates whenever we release new videos. With this, thank you for coming and joining us live today. And don't forget to watch our other videos which are available on this channel. And also check out our budget update for small business owners once we release it tomorrow. Thank you. Until next time. Bye bye.